Success often creates a paradox. You own a valuable company, but your net worth is entirely illiquid. That wealth is trapped in the valuation, and the pressure of maintaining it creates a constant, high-stress drain on your daily life. Founders often spend their careers generating human capital, the training and effort required to build a team. However, they rarely have the bandwidth to convert that effort into financial capital, which is the passive growth of investments outside of the company. When your net worth is concentrated in a single private asset, your personal security is exposed to every market swing. Without a plan to optimize your taxes as your income grows, that future number you need for retirement remains a moving and uncertain target. This tension stems from the absence of a clear, actionable exit strategy. You built the value, but lack the mechanism to convert that business wealth into long-term financial security. Most high-net-worth business owners suffer from the coordination tax. This is the hidden financial drain that occurs when your CPA, wealth manager, and insurance broker operate in isolated silos, never communicating with each other. Fragmentation leads to critical errors, like missing the strict 45-day window to identify a replacement property in a 1031 exchange. A 1031 exchange is a tax deferral strategy that allows you to sell an investment property and reinvest the proceeds into a new, like-kind property without immediate capital gains consequences. Legacy wirehouses rarely solve these technical problems. Instead, they focus on selling brand prestige and yuppie wealth markers to justify their fees, prioritizing their own marketing over your actual financial engineering. You don't need another 40-page financial plan that sits in a drawer. You need a unified de facto chief financial officer to integrate your team and eliminate the coordination tax. This slide shows Good Deals RIA, a platform designed as an operating system for wealth. We orchestrate financial sovereignty by unifying fiduciary wealth management and risk analysis into a single cohesive structure. Our technological moat uses Altruist for $0 platform fees and AI-driven planning tools to handle tax modeling. By using digital native insurtech integrations, we move at the speed of your business rather than the speed of a legacy bank. This automation removes the administrative friction that slows down traditional firms. Because our software handles the data entry, we can maintain a client-to-staff ratio 3 times higher than the industry average while keeping the focus on high-level strategy. This diagram highlights the math behind our model. While traditional wirehouses often take a 50% cut of revenue and fees, our value-driven architecture operates at 20%, significantly increasing your total purchase value. By replacing manual paperwork with elite technology, we shift the burden of technical responsibility to the firm. This keeps the client schedule open for new opportunities. We employ a strategy called pipeline intelligence. We engage owners years before a liquidity event, supporting capital allocation during growth and stability phases. We use exit planning software to measure your transferable value, what your business is worth if you aren't there to run it. By identifying and closing operational gaps, we help your valuation multiplier climb from a 4 times EBITDA up to a 6 times EBITDA. EBITDA measures a company's operating performance, standing for earnings before interest, taxes, depreciation, and amortization. At the same time, we deploy advanced tax levers like cost segregation studies. This reclassifies building components into shorter depreciation schedules of 5 or 15 years, creating immediate cash flow through accelerated depreciation. Proactive pipeline management turns a standard exit into a highly engineered transition. You create millions in additional tax-efficient wealth long before the final contracts are ever signed. Efficient technology is only half the battle. Your team's financial incentives must be perfectly aligned with your results. This slide details our cooperative compensation model. It is a meritocratic system that explicitly rewards the actual delivery and success of a project more than the initial sale, protecting your long-term outcomes. This structure uses flexible, dynamic pods. Clients work with dedicated specialists led by team leads who have total visibility and accountability for the success of every project. When the firm's internal pay structure is tied to your long-term results, the coordination tax disappears. This slide maps the shift from paper wealth stress to total financial agency. By securing the technical foundations of your estate, you gain the freedom to focus on your health and the creative work that drives you. This visual outlines our core philosophy: gratitude drives generosity. We apply these financial structures to everything from family offices to neighborhood institutions, like our Cafe Sunshine model, a blueprint for launching sustainable, community-focused businesses that are fundable from day one. Sophisticated wealth management turns stagnant capital into an unshakable foundation. This structure allows you to build a legacy and a community footprint that extends far beyond a balance sheet. Stop managing your own managers. Stop paying the coordination tax. Assign the technical responsibility to an operating system built for the modern investor. Leave the legacy brand age behind. Schedule your introductory call today, and let's begin day one.